What's going on YouTube? It's Payout Pete here, back with another trade review. Today we're looking to trade in this profile here between 780s to 920s as the market just continues to rip higher and higher. We're now at high of day trading, and we're building volume in this distribution between 780 to 920, so I don't want to fade this. Right now I'm just waiting for a pullback into the area around 760. Somewhere between the 9 and the 20 EMA, so I can get long and continue this move up. Not looking to fade the last 2 days. Yesterday I stopped out of my accounts on daily loss limit, trying to long the thing like 5 times. So today, just looking to do the same thing, get long, be patient, wait for price to pull back into the 9 or the 20 EMA, which has been holding up yesterday, and it looks like it's going to hold up today. Zooming in the yellow zone now, we have a pullback after we left the POC right above us at around 92. It's coming into this area, it's this LVN here, and I'm seeing some bid, and I kind of get a little bit excited, and I literally just limit in right where price is trading instead of waiting for it to push up and then pull back, which is how I usually enter my trades. But I just got really excited with this trade thesis, thinking we're going to revisit the highs, because the highs has no taper in the volume profile where my TPs are. It's quite ledgy. There's no excess in the highs, so I'm pretty confident we're going to revisit the highs. The most shittiest thing about this trade right now is I'm using an insanely wide stop for how the average range is trading. Average bars are about 10 points. I'm risking 20 points right now, and typically I try to risk at least 3/4 of the average trading range. So right now the average trading range is around 10. I try to risk around, today should have been at least 5 to 7 points, 10 at most I would think, but I'm extending my stop losses, moving my stop here, because if they're going to bid it, they're going to bid it exactly in this area. And so I needed more room. I just had a terrible entry, and I realized that as soon as it took heat. So I had to move it to avoid getting stopped out and getting back in, even when the trade is still right. So, yeah, totally not happy with the way I had to move my stops here. Luckily, price does come back to my entry, which I should have flattened and re-gauged for entry, but the reason why I didn't was because if I did that, I'd be flipping in and out of a position, and that would get me all fucked up in terms of execution. So I decided to hold this trade. At this point, my heart rate spiked from 70s to like 100 holding this thing. And you know, ideally, how I would have entered this trade is now I would have placed a limit order, because we traded above this 806 bar. I would have placed it right around here. That's where I would have typically, if I followed the way I typically execute and not get too antsy and excited about catching a trade, and I waited patiently, that's exactly where my limit order would have been. So in my mind, to hold this trade, I'm thinking, look, that's where I would have entered. At least I'm still in the trade. It's not the price I wanted, but you know, it's moving in my favor, and I think we revisit the highs, but I do want to start peeling some off around IB high. I'm playing mental gymnastics now, trying to decide, okay, how should I scale out this position, because my entry is pretty shit. My entry should have been 10 points lower at around, what is that, 72 versus what it is now at 80s. So we just hold this thing here. I think right around here, there's going to be like a volume spike. Don't like that. Especially right when it's towards I'd rather it melt through the level than for it to spike up through it. And it spikes up right before my TPs at IB high, and so I kind of peel them off early right about here. It spiked up. Last one was for a 50% extension at around 70s, but I decided to peel it off right here because of consistency rules with lucid trading. Thanks for tuning in, guys. Comment, like, subscribe to the video. Follow for more.